Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to your Bloomberg Brief. Let's set your agenda. The trade de-escalation continues. Beijing lifts its ban on Boeing deliveries. President Trump lands in Saudi for more trade talks. The big, beautiful bill. Republicans released their latest tax bill incorporating the president's campaign vows. And higher stakes for inflation as growth optimism rebounds. The latest CPI report hits today. And optimism we had. We gained more than 3% on the S&P 500 yesterday, taking us back to the March highs. We ease off of that this morning. A breather after the Sell America trade unwinds. We're down by about 0.5% for the NASDAQ 100 futures. It was tech that led yesterday for S&P. We're down about 0.4%. It was also treasuries under pressure yesterday. Front-end yields went higher by 12 basis points yesterday. What a move. Again, that takes a breather today. We're down by about 3 basis points on your front end. 10-year yields under 4.45. Those are lower by 2 basis points this morning. We're going to get CPI at 8:30 a.m. So we are waiting for that as we've had more cuts priced out of this market. Those are your overall markets. Let's get you some stocks to watch this morning. With that is Bloomberg's Joe Easton. Good morning, Joe.
Morning, Danny. So there is big news for Boeing today, with China telling airlines it can start buying Boeing jets once again following a month-long block. We're seeing Boeing rising around 0.6% in the pre-market, but bear in mind that stock was also up yesterday following all those comments from Besson. On trade then, in terms of Coinbase, one for the Bitcoin bros, we are seeing that one sharply higher today as the platform is set to join the S&P 500. That stock was trading close to around $300 in December, but it still has managed to gain entrance to that index despite the drop. Then Pinterest, around 500 million users on that platform, but potentially some competition concerns coming in from Google's new visual device search function. That one's sliding. We're down 3.5%. Pinterest in the pre-market. Check out the before the bell opening wrap as usual on the terminal.
Joe, thank you so much, and we'll catch up with you later in the hour. Bloomberg's Joe Easton. Also coming up this hour, we'll talk with George Saravelos of Deutsche Bank in just a moment, and JPMorgan's Priya Misra will be joining us later this hour. Now, as the U.S. announced a trade breakthrough with China, George Saravelos, global head of FX research at Deutsche Bank, wrote, "American trade policy has turned more conciliatory, and there is now a better defined range of tariff outcomes. The peak of trade war uncertainty is in." I'm pleased to say that George joins us now. George, good morning to you. What a day yesterday. How much did it alter your growth outlook, both globally and for the U.S.?
Good morning from sunny London, Danny. I think we were already turning more optimistic on the growth outlook, given the big decline in oil prices, which is effectively a stimulus, especially for the oil importing countries. You anyway had an easing in global financial conditions. But I think this move on China was definitely at the very, very upper end of what were already high expectations. And it really marked the completion of the pivot, so to speak, towards a more conciliatory trade policy that started just a few weeks after so-called Liberation Day. So I think the market was right to rejoice, so to speak, in the news. And we definitely now have a much more well-defined range of outcomes as far as tariffs go from the U.S.
There's going to be a lot of discussions, George, as to what extent damage, though, has already been done. Is there still a base of foreign investors that look at both the volatility in markets and the volatility in policy and shy away from the dollar and from U.S. assets from here on out?
So I think there's two separate questions. One relates to the dollar and the funding of those twin deficits. And that's a question we are grappling with as well. I think it's for sure we can say the fact that policy as a whole has moved to be in a more conciliatory direction. That's a positive. So we discussed trade, but bear in mind just the broader approach to foreign policy as well is important. And Trump has stepped back from some of the slightly more aggressive statements he was making on Ukraine, for example. We've just generally had more conciliatory statements, for example, making reference to keeping Powell as well. So I think all of that removes some of the more extreme tails that the market was worried about. But this being said, we do think the damage has been done and the toothpaste is out of the bottle, so to speak. I reached that conclusion from looking at some of the high-frequency data where you still see a reluctance to return to the full-blown buying of US assets by foreign investors you were seeing in January. But I think even more critically, when we discuss the outlook with some very large investors, whether that's real money or central banks, the key phrase they all use is concentration risk. The realization that concentration risk was too high on dollar assets going back to January. And I think there's almost a unanimous view that there's an unwillingness to go back to those high levels. So definitely tail risks coming down, but I don't think we can go all the way back to where we were in January.
George, it almost sounds like this is something that was inevitable. I wonder if you agree with this idea that the world was overexposed U.S. assets, U.S. dollars, and this was something that was bound to happen, but just Trump's policies acted as the catalyst to move us away from it. Is that fair, that this had always kind of been the direction of travel that made most sense?
So it's all about the policy mix. And if you go back to, for example, the expectations the market had in November, December, I don't think anyone expected such a sharp break in policy, whether it was tariff or foreign policy. So in that sense, I don't think it was inevitable. If the overall policy approach was a bit more conciliatory to start with and less extreme, I suspect that willingness to hold US assets would have stuck. Now, this being said, it's not only the US where we're seeing changes. Of course, we're seeing a huge change in Europe and Germany in particular. Some of that, you could argue, was actually caused by Trump, and that's a positive side effect. And the same thing in China. But all of these things are history, so to speak. And I think it's going to be very difficult to return back to the January environment, albeit things are definitely more positive than where they were at the start of April.
Well, George, you also write about in your notes, and I think this is really interesting because in January, when we first got the Trump administration, we got the announcement of DOGE. We saw things like wanting to hike taxes for the richest among them, that there would be some fiscal tightening in the U.S. But you've talked about the walk back of not just that in America, but the rest of the world, too, from the various political scenarios, that it looks like more loosening might be on its way. How do you view that, the fiscal scenarios that we're about to enter in the U.S. versus the rest of the world?
So it's interesting because if you look at the rest of the world, we see a pattern of global fiscal easing. You've had numerous elections. You've just had one in Canada. You've had one in Australia. You have the upper house election in Japan. You've had the one in Germany. And the outcome of all of those elections is looking towards more global fiscal easing. And that is a big shift from last year, where the rest of the world was pretty much in tightening mode. I would say that's a key pillar that's helping global growth expectations this year outside of the tariff war. But the big uncertainty is really on the US side. And we're seeing these various drafts of the bills that are released out of the US. We don't still have full information. The information around the potential spending cuts, which are the toughest ones to agree to politically, that still hasn't been released. And obviously tariffs. That is effectively a tax increase, which is a bit of a moving target. But I would say in terms of forming the view for the next few years, that last key part of the puzzle is this US budget, how tight or easy policy is. So we're waiting for more information on that. What we do have a high degree of conviction, though, is global fiscal easing. And I think that's supportive of the global growth outlook, irrespective of what's going on in the US.
So how does that color your view on where dollar goes from here, George?
This should, all else equal, be more negative on the dollar, because if the rest of the world is lifting its growth expectations via policy support, on the fiscal side, it means growth goes up, it's supportive of risky assets, but it also places less burden on central banks in terms of needing to ease. So I think this big global fiscal pivot, so to speak, over the last few months is definitely helping the broader direction of a weaker dollar. But the last key part of this fiscal puzzle, so to speak, is the US and how tight or not tight that policy stance is going to be. And there's still a tremendous degree of uncertainty. Secretary of Treasury Bessent has been communicating in terms of a desire to tighten. Some of these budget plans that have been released are towards the easier side, but we've still got the spending cuts. So that's the one thing we're keeping our eye on over the next few weeks.
Well, we definitely have that debate happening live in Washington, D.C. right now with that big, beautiful tax bill. George, this has been so fascinating. It is always wonderful to have you on. George Saravelos of Deutsche Bank. Let's get you some other top stories now that are trending on the terminal this morning. Google is facing over 12 billion euros in damage claims from dozens of price comparison websites across the EU. Bloomberg has identified 12 ongoing civil cases accusing the tech giant of illegally leveraging its search dominance to give its own shopping service an edge. Google denies that any of the European civil suits have merit. Republican lawmakers are looking to hike endowment taxes on Harvard, Yale, and several other top private colleges from 1.4% to 21%. That's according to the bill that was put forward to the House. The proposal is gunning for private schools with at least 500 students and endowments exceeding $2 million per student. The Trump administration has already blocked about $2.2 billion in federal funding for Harvard, and Princeton has also seen federal research funding frozen. Elsewhere, the U.S. State Department has approved about $1.4 billion in arms sales to the UAE on Monday. That comes ahead of President Trump's visit to the Gulf state, which will be the third stop in his Middle East tour. The UAE wants to buy 6 helicopters for $1.3 billion and parts and other maintenance for F-16 warplanes at an estimated cost of $130 million. Coming up, the GOP's Big Beautiful Bill takes center stage, but not all Republicans are happy with it. We'll talk about the fiscal hawks and the debate to come next on your Bloomberg Brief.
We're really pleased with the progress. We expect by Memorial Day it'll pass in the House, and then it'll go on to the Senate and hopefully be there by the 4th of July. And literally everybody thinks that could happen. There's not a lot of disagreement left in either the House or the Senate. And so we're super optimistic that this is going to be probably not only the biggest tax bill ever, but the best designed and the fastest achieved.
That was the president's top economic advisor, Kevin Hassett, on Sunday. A new draft of that bill has been released and highlights many of the president's campaign promises, including a boost in the state and local tax deduction limit. Joining us now is Bloomberg's Derek Wallbank. Derek, great to see you this morning, or afternoon for you. Just how much of the president's priorities are contained in this draft of the bill?
Well, Danny, a good lot of them. This is Donald Trump's one big beautiful bill, as he calls it, right? This is going to be the vehicle for carrying most of the president's domestic agenda, extending his tax cuts from his first term, as well as putting in some other tax plans that he came up with on the campaign trail. So included here, no tax on tips, an overtime tax break, tax breaks for all sorts of other things. Well, you've also seen some increases. There would be an increase to the university endowments tax that would target some of the top tier universities that Trump has gone after in other venues as well. You're also seeing an increase to the SALT tax, the state and local tax deduction, that is primarily borne by residents of blue states and major cities, New York, San Francisco, Los Angeles, things of that nature. So you are seeing a sort of molding together of a bill that does take in a lot of what Trump wants. Now, there are some warning points. I know Hassett in the clip that you played was quite sunny about this, but the simple mathematical fact is that Republicans have reasonably narrow margins in the Senate and very narrow margins in the House. And so they need near unanimity to be able to get this through.
And we are just looking at live images now. Trump has landed in Saudi Arabia for an investment conference. He is with Mohammed bin Salman, the royal prince. He's expected to have an official welcome ceremony and a coffee reception. So we're just seeing some of the live images of that now. And Derek, at this conference, we did already hear from Treasury Secretary Scott Bessent that said that he expects that the Trump tax plan will pass by the summer. You were just speaking to some of the difficulties of that. To what pushback and what extent of pushback will they be getting from the deficit hawks?
So let me give you a couple of things. The first one is that this bill scores as revenue decreasing. So you're talking right now in this current draft somewhere in the neighborhood of of cutting about $3.7 trillion in revenue over the next 10 years. That's not nothing. It's within the guidelines that committee leaders were given, which was about 4.5. So they have some room to move if they need to. But increasing the deficit is something that a lot of House Republicans particularly have said they don't want to do. So you can look for some changes there. There's a provision on Medicaid that is going to be very, very thorny. That's the federal health program for particularly low-income people in the United States. There are some changes there that are being made that would have the net effect of reducing the number of people on Medicaid, so that's going to be something there. And those are just some of the places that I would look for where you're likely to see some fights on this. Democrats are going to look throughout this whole process to make Republicans take hard votes, and Republicans will have to find ways to stick together.
Yep, certainly not the end of the road here. Derek, thank you so much for joining us. That is Bloomberg's Derek Wallbank. And again, you are looking at live images of Riyadh, where the president has arrived in Saudi Arabia at the royal court. You are looking at a traditional welcome ceremony. He was flanked with horse riders dressed in traditional white, carrying Saudi and American flags. The president walking with Prince Mohammed bin Salman. Trump is expected to attend a lunchtime meeting and hold further talks. Again, this is part of a Saudi U.S. investment forum where we're seeing leaders. Larry Fink spoke, Jane Fraser, and again, the Treasury Secretary Scott Bessent was also speaking at that very forum, saying that he expects the U.S. Congress to pass a bill to make his tax cuts permanent by the summer. So President Trump and MBS walking side by side in the images you are seeing now. Now, talks will continue, but we've already had a lot of them. China has also removed a month-long ban on airlines taking deliveries of Boeing jets following that breakthrough yesterday in trade talks with the U.S. in Geneva. Officials in Beijing have started to tell domestic carriers and government agencies this week that deliveries of U.S.-made aircrafts can resume. Let's get more with Bloomberg's Brendan Murray. And Brendan, we heard from the president yesterday saying that China has agreed to remove all non-tariff barriers. I'm assuming the Boeing jets is part of that. But what do we understand of what the president actually meant?
Yeah, exactly. Neither side, either the U.S. or China, saw this situation, the trade war that escalated pretty rapidly over the past 6 weeks, as sustainable. So what they accomplished over the weekend was to roll back those tariffs fairly significantly, and some of the incremental steps that they took, like the Boeing delivery situation that China put in place, these are now being rolled back. Both sides basically can claim a win. China goes home and says we got those 145% tariffs reduced to 30, and the president and his trade team come home and say, look, we got some progress from China on fentanyl and some pledges to reduce trade barriers that have been long existing. So what we're seeing now is both sides ratcheting down the temperature and trying to approach the next 90 days with a sense of mutual understanding that they can accomplish a breakthrough. We heard Treasury Secretary Bessent say today that President Trump's first term phase 1 deal with China is sort of a template for what they can accomplish. So we can look for something along those lines, some agreements by China to purchase U.S. commodities and things like that as a template, as he said, for what we can expect in the months ahead.
Yeah, I mean, we are getting some interesting lines out of this U.S.-Saudi forum. Again, we're looking at live images there of the President of the United States arriving in the royal court in Riyadh. Among them, you mentioned Treasury Secretary Scott Bessent speaking at this very conference. One of the things he said was that the EU faces a collective action problem. What did the Secretary mean, Brendan? What does it mean for the EU's status in negotiations with the U.S.?
Yeah, it means his point there seems to have meant that the countries, or the 27 nations of the EU bloc, are going to have a hard time coming together on a unified position to confront the U.S. On matters of trade. He mentioned Italy and France would have opposing views. It wasn't really clear what he meant by that, but this is definitely a shot across the bow of Brussels to say this is going to take longer than any other sort of tariff deal. We had the UK deal last week, and now this China deal sets the stage set for the next 90 days. So Bessent is clearly saying that is signaling to Brussels that your collective action problem, as he termed it, could be a barrier to anything quick.
All right. Well, one step forward, one step back. Brendan, thank you very much. Bloomberg's Brendan Murray again as we look at live images of the president in Riyadh alongside MBS. Now, coming up, speaking of the president's trip to the Middle East, Qatar's 747 offer to President Trump fuels some security concerns. We'll get you the latest on that and your other front pages this morning. You're watching Bloomberg Brief. Let's take a look at the front pages this morning. What's making headlines around the world? First up, the Washington Post has this. Top U.S. security officials have said that Qatar's 747 jet offer to the president would be a security problem. They said that the president will likely have to waive existing security specifications to be able to use the plane, calling it a great gesture by Qatar. Trump said that he would be, quote, a stupid person to not accept the gift. Quickly on the Wall Street Journal, Trump's America First focus leaves Israel on the sidelines. The president's decision to skip America's closest ally in the region on this Middle East tour he's doing follows a series of announcements that have surprised Israelis. Now, we're going to have more on Trump's Middle East trip coming up alongside with what to expect with CPI today. This is Bloomberg. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. The trade de-escalation continues. Beijing lifts its ban on Boeing deliveries. President Trump lands in Saudi for more trade talks. The big, beautiful bill. Republicans released their latest tax bill incorporating the president's campaign vows. And higher stakes for inflation as growth optimism rebounds. The latest CPI report comes later this morning. And the S&P 500 climbed more than 3% yesterday, the biggest gain since the original 90-day pause. It takes a breather this morning. We're lower on the NASDAQ 100 futures session, given that outperformed yesterday, down 0.4. Your S&P down 0.3. We are now only 5% below the all-time highs from mid-February, if you're keeping track. This bond market also rallies this morning after a big old sell-off yesterday. Twos higher by some 12 basis points for those yields. For 10s, it was over 9 basis points. We're at 4.44 for your 10-year yield and 3.97 for your 2. Let's get some stocks to watch this morning. Back with us is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So it is big news for Boeing today, with China allowing airlines to continue buying jets from the U.S. company for the first time in around a month. We're seeing Boeing stock gaining around 0.6% at the moment. Bear in mind that stock was up yesterday with the broader headlines we got on the trade news. Then a big news story again for the Bitcoin bros. We're seeing Coinbase surging in the pre-market. The company is going to be added to the S&P 500 index for the first time. That's despite a pretty big drop down since December in that stock coming in to the index. Then in terms of Pinterest, a bit of competition from Google. Their search function is going to start potentially providing some competition. As far as I can tell, this company pretty much based on people uploading pictures of their DIY and home renovation. And that stock down 3.5% today. One to watch ahead of the open in New York today, Danny.
Nothing wrong with a little DIY inspo, Joe. Thank you so much. That is Bloomberg's Joe Easton. Now, April's CPI report will be hitting in less than 3 hours' time. Joining us to go over the details is Bloomberg's Mike McKee. Mike, what are you expecting this morning?
Well, I hate to be the bearer of not so great news, but we're going to see a little bit of a rise in inflation, but we're also going to see that it doesn't matter a whole lot to the markets, given everything else that's going on and the fact that the Fed has been pushed out so far. A slight rise on month over month. Last month, the headline was down 0.1%, forecast to be up 0.3 this month. Same for core, up 0.3 this month is the forecast. But on a year-over-year basis, you can see we don't see any change. Base effects for that are responsible. But look below the hood. That's what we're going to be doing today to see if there's any indication that inflation is creeping in from the Trump tariffs. Used cars are, they were in March down. We're expecting to see them rise. Manheim reported the largest rise in used car prices last month since 2002, 4.9%. Because everybody wanted to buy new cars, not enough new cars, they start looking for used cars, the prices go up. We'll also be looking at food, which is something the president has claimed has been going down in price, but has not actually been going down in price. We know gasoline has. That'll be good news. And of course, now prescription drugs are going to be part of the news. I don't think they're going to be up this month necessarily, but will they be down as much? And then, of course, clothing, because a lot of that comes from Asia, and that's one of the problems that we've got is stuff coming from Asia under the tariffs.
Right. Well, so if this does incorporate, for the first time, Liberation Day, but also the walk back, when do we expect to see, if there are real inflationary effects from tariffs, to start to show up in some of the hard data?
Well, it's important to remember that even with the walkbacks that Trump has done, we're still going to get inflation because we're still going to get higher prices. There are 10% universal tariffs and 30% on China for right now, and more tariffs coming, according to the president. So look for the month by month to get larger and larger, because we don't know exactly what the timetable for all this is going to be. But Fed officials have said we might get some concrete numbers by July, and maybe by August you have enough kind of information that the Fed can make a decision at a September meeting.
Well, Mike, looking forward to you breaking down the numbers in 3 hours' time. Thanks for joining us bright and early. That is Bloomberg's Mike McKee. Joining us also around the table is Priya Misra, Portfolio Manager at JPMorgan Asset Management. Priya, great to see you this morning.
Thanks for having me.
So does the CPI matter to markets today?
So I will be with Mike there saying it doesn't matter as much, but I'll be with him under the hood. So we're certainly going to be looking for those tariff impacts on goods. I'll also be looking at service inflation. The U.S. is still a service economy. 70% of the consumption basket is services. Is there any feed through? So we're likely to see, I don't know if it's this month, probably a little bit this month, the next few months, goods inflation is likely to pick up. But are we seeing that feed through into service inflation? There may be a case, in fact, that's probably our base case, that at some point, as goods inflation goes up, service inflation might actually come down. That's the sign that the consumer is having to make these hard choices. If I have to pay more for that used car or new car, I might cut back elsewhere. And I think the Fed will want to see that if they are to entertain rate cuts. I think that's the fear of the market, that goods inflation goes up, service inflation is already above target, so that's going to handcuff the Fed. But I think the real incomes are slowing. So we'll see through the course of this year as tariffs play through. And we still don't know what's the effective tariff rate, but I would say it's 15% according to the Yale Budget Lab. If prices on goods start to go up, what happens to the rest of the economy? Can companies pass it through, and can consumer demand for services stay high? And that's the vulnerable part.
Well, there was this thesis that started to be floated yesterday that if you do get a walk back of tariffs, then growth doesn't look as bad. And if growth isn't as bad, then companies can pass through higher prices to consumers if they're not feeling a pinch as more. Therefore, after yesterday, inflation might actually be worse. Do you think there's any merit to that argument?
I think in the near term, that's quite possible. Companies might, I mean, I do struggle with if you've done all the front loading, and there may be still front loading happening right now because we're in that pause period, then really that increase in price is not going to be that high. But to your point, if the number was 145%, you really can't pass that through. But if it's 30%, maybe you can pass a certain percentage. But then I think we have to watch the consumer side. And this is where the labor market's going to become important. I think the news over the weekend pushes the recession risk much lower, but we still have uncertainty. The administration calls it strategic uncertainty, which might be great as a negotiating strategy. But if you're a company, do you hire more? Do you invest more? I think we have to embrace uncertainty. That's going to be with us. That's going to be a headwind for the labor market. I think hopefully layoffs don't happen, but you can have the hiring pace that is already slowing, remain slow. Wages don't really pick up. So then back to your question, that will consumers be able to accept those price increases? And they might for certain products, they may not for others, or they may cut back elsewhere. They might make those tough decisions. So I think there may be this sequencing where inflation goes up. I mean, tariffs are a tax. They're a tax on the corporate sector or consumers, depending on who actually pays for it. But at some point, I think it's going to be demand destruction. So I think those rate cuts are fair. Do they get pushed out? Probably, because you may get that inflation effect first.
I think also what you're saying is such a good point that if you're an investor, you can make the gamble that Trump will back down. If you're a company, making that gamble is an incredibly expensive and might be a very damaging one. So in this debate of what damage is already done, is there a scenario where this huge risk rally we got yesterday, all the optimism, that is too far gone, that is too overdone, that the damage is done, and that things like corporate profits, sentiment, it's taken a real hit that's going to last?
Yeah, I do think some damage has been done. You can't unsee tariffs. The president has called it the most beautiful word in the dictionary, which means it's going to remain a negotiating tool. And plus, we don't really have that many deals. We have a deal with the UK. With the rest of the world, we're negotiating with really all our trading partners. Now, we have some agreement, which is good, with China. So to your point on risk rally, I think it was good it took this worst case scenario off the table. Does it continue requires that damage that we're talking about to be sort of undone and for there to be some growth positive news. And that's where I'm watching the fiscal side. Let's watch deregulation. Remember the assumption that sort of the market had was the good stuff will offset the bad stuff of tariffs. We've had the tariffs, we've had the walking back. That uncertainty is still there. If you're not going to get a lot on the good stuff, then I do worry that corporate profits are going to be under pressure. I think we're sort of frozen. The economy might be frozen into this paralysis mode, which can then mean that the labor market slowly goes down. So I think that recession scenario is lower, but is our base case below potential growth? And that's becoming our, the soft landing. So 1.5% GDP, that's really not the best recipe for risk assets to take off. It means we can probably consolidate here. We've had a really volatile month and a half. Would be nice to actually stabilize. But if you take a step back, we're still dealing with uncertainty. The effective tariff rate is still 15%. That's a tax that somebody in the economy will have to bear. And that's going to be this sort of dance between the consumer and the corporate sector to see. But ultimately, the combination of the two will pay it off. And I think that's going to mean slower growth. It'll bring the Fed back in at some point. Once, I think they really want to make sure that inflation is not taking off. This tariff inflation is not feeding through into inflation expectations and servicing.
So are yields attractive at this point then?
I think so, yes. Some of the rise in rates was this concern that we're decoupling. And that, to me, that was the most important well, apart from the fact that, the US, China lowered their tariffs. The second most important thing over this weekend was when Secretary Bessent said, we're not trying to decouple. There's strategic decoupling in a certain few industries. I think the market can handle that. If we're not decoupling from the world, then the world continues to hold on to US assets, dollar-denominated assets. I think that was the concern in the Treasury market, that even though we're dealing with maybe a weaker growth environment, maybe the rest of the world doesn't need to hold as much in treasuries. I think we can take that risk lower. So I do think, we've long said in a soft landing world, 375 to 4.5 should be the 10-year trading range. We're right at the upper end of that range. I really struggle to see rates going much higher. You have to have that pro-growth re-acceleration, Fed hiking, that scenario come back, I think, for rates to rise a lot. So we're legging into duration. I think it is a good hedge. There was concern for about a week in April that it may not be a hedge for risk assets. I think it is a hedge. If you do see the damage that I think has already been done and this paralysis of the corporate sector feeding through into weaker economic data, let's say the next jobs report, I do think then Fed cuts come back on sooner. The Fed's been telling us we're not in any hurry, we can wait. But we heard from Chair Powell, if they know that they have to cut, they can be aggressive. So I do think owning, maybe not the very long end. I think the 30-year has duration risk in it. But the 2 to 5 year or 7 year sector, I think those yields are attractive as we realize that, the aim of, I think that was the big issue, right? What was the aim of tariffs? Was it to ring fence China? Was it to reduce the trade deficit? Maybe it's just to get fair trade.
And to your point, Scott Bessent saying it's just to kind of avoid what we had in COVID to make sure strategic industries we have access to. Priya, that's all we have time for. So wonderful to have you on. Always a pleasure to have you in the beginning of our week. I'm sure the entire world will look different by the end of this week. Thank you so much. JPMorgan's Priya Misra. And we'll take you out on live pictures of President Trump in Riyadh with Crown Prince Mohammed bin Salman welcoming the president earlier. MBS now shaking hands with the U.S. delegates, including State Secretary Marco Rubio, Treasury Secretary Scott Bessent, and as you can see there, Elon Musk in the very same room. This is Bloomberg. And we go live back to Riyadh, where President Donald Trump is meeting with Crown Prince Mohammed bin Salman alongside a large group of senior officials and CEOs. That includes State Secretary Marco Rubio, Treasury Secretary Scott Bessent, and Elon Musk. It is the president's first major trip overseas since taking office. Appear to be looking at a few documents over there. Bloomberg's Jomana Bersecci is also at the Saudi Investment Forum, and she joins us now. Jomana, we see the president there, just a very short distance from where you are. What is the president's itinerary in his visit through the Gulf?
Yeah, that's right, Danny. So a big day, very significant day for Saudi Arabia and, of course, the rest of the GCC nations. The fact that President Trump chose to visit GCC countries for his first major diplomatic trip is an important point for the region. He landed a couple of hours ago. There was a handshake at the airport. They had a brief stop, a cup of coffee at the airport before moving on to the Royal Palace. And what you were looking at now was images of the U.S. delegation sitting alongside the Saudi delegation in what is known as the ceremonial blue room. That is a place where they're going to be having tea and coffee before proceeding to lunch, with some bilateral meetings taking place. And of note, you also observed that Elon Musk was in the room. Other key CEOs will also be present in that meeting. We are here at the Saudi-U.S. Investment Forum that has been going on since 9 in the morning. Key officials from the U.S. have been here, but alongside some of those big CEOs from American companies, you have the likes of the Citi CEO, Jane Fraser. She was on a panel earlier. BlackRock CEO, Larry Fink, talking about the investment opportunities over here in Saudi Arabia. And then in a couple of hours' time, once that lunch is finished, and there may be a small announcement at the end of the lunch, that is what we're hearing, President Trump and the Crown Prince will be making their way to this venue. So a little behind me, you can see maybe about 100 meters behind me is the plenary room. He will be coming into that room, and around 5 p.m. locals, in a couple of hours' time, he will be making a speech there. And on the back of that speech, we are expecting to hear about those deals that everyone has been talking about in anticipation of this trip. Another data point to just draw to was the last time President Trump spoke to Crown Prince MBS was shortly after his inauguration, where at the time the Crown Prince pledged to invest $600 billion in the U.S. over the next 4 years. President Trump said he would like to see that number grow to north of $1 trillion. The question, Danny, is, are we going to see that $1 trillion? And I guess the follow-up question is, where's that money going to come from?
Jomana, it's a very fair point, and it also comes off the back of this meeting with Jamieson Greer and Treasury Secretary Scott Bessent in Geneva. Scott Bessent has been there at the Saudi conference on trade. Are we expecting more meetings, more conversations, be it between CEOs and Trump or world leaders and Trump about trade? Any developments we could get from there?
Really significant point you raised there. And actually, the Treasury Secretary Bessent, he kicked off the forum today and was talking about actually the U.S.-China agreement over the weekend, saying that it was a good step towards the escalation. But when it comes to Saudi Arabia and U.S., I think what we're going to be looking at is more sectoral type of deals. So deals when it comes to artificial intelligence. David Sachs, who's the crypto AI czar in the U.S., was also speaking on a panel earlier, and he was saying that they're looking to water down those so-called diffusion rules introduced by the Biden administration to make it easier for some of these GCC nations to obtain the chips that they need. So maybe an announcement on that front. We're also hearing a potential defense deal. $100 billion is the number that's being floated around, a potential deal for Saudi Arabia to buy U.S. arms and weapons. Possible deals also on the energy front. So focus on sectoral deals as opposed to a comprehensive trade deal. But the backdrop to this is, and this is what we've been talking about, I think, over the past year, oil price is lower, Saudi oil production is lower. All of that is hitting Saudi revenue and coming at a time when the budget deficit is growing, the current account deficit is growing. And so Saudi Arabia not only has been a traditional exporter of capital, but this time around are looking to channel investment into the country as well. So from Saudi's perspective, they also want to see commitments from U.S. industry leaders as to what they're going to put into Saudi Arabia. So it's a two-way street. It's not just money flowing outwards.
Jomana, really looking forward to your coverage throughout the rest of the day there at the U.S.-Saudi Investment Forum. That is Bloomberg's Jomana Bersetchi in Riyadh. Now, back over in Washington, D.C., a new draft of a Republican tax bill was released on Monday, and it highlights President Trump's campaign vows, including raising the state and local tax deduction to a $30,000 limit. Joining us now is Bloomberg senior editor Bill Ferries. Bill, great to see you. So just how much of this tax draft does indeed incorporate the president's priorities?
Really quite a bit of it. You mentioned right there the SALT tax, the deduction on state and local taxes, raising to $30,000. We'll see if that's enough for all Republicans, but it also includes things like exempting overtime from income tax and tips. Those are two things that came out during Trump's campaign. It doesn't go all the way to some of the proposals we heard recently. It keeps the top tax rate at 37%. Donald Trump had floated a 39.5% tax rate to House Speaker Mike Johnson. That's not in this draft. It is still early days. It's a very tight majority in the House. So what actually comes out of this in the weeks and perhaps months ahead might be a little bit different. But this is certainly the aspirations of the House Republican leadership.
So, Bill, it's certainly the aspirations, but this is by no means a done deal. It's a thin majority, and you have deficit hawks. How much of an uphill battle will this bill face to become law?
It's going to be quite a fight. The total price of this bill is $3.7 trillion over 10 years. That's under what the Republicans said their limit is, but it's still going to be a high price for a lot of those deficit hawks you mentioned. The SALT deduction, that deduction on state and local taxes, a lot of New York Republicans in particular are saying it doesn't go high enough. They would like to see at least $62,000 per filer. That's going to be a big deal for them. You cannot afford to really lose more than, let's say, one or two Republicans if you're assuming no Democrats support this legislation. So the Ways and Means Committee will take this up today. Mike Johnson says he wants to have the bill passed in the House by Memorial Day. Then it goes to the Senate, and I think we're going to see a lot of proposed changes emerging on the Senate side.
Bill, thank you very much for your coverage. That is Bloomberg's Bill Ferries. And again, you're still looking at live pictures of Riyadh, where the U.S. delegation is shaking hands with both Trump and MBS. At the moment, you are looking at Larry Fink, the BlackRock CEO, greeting both the world leaders. Now, elsewhere, according to sources, China has removed a month-long ban on taking Boeing deliveries. It follows a breakthrough in trade talks with the U.S. yesterday morning. Joining us now is Bloomberg's Benedict Campbell, who heads our global aviation coverage. Benny, how much of a boon is this to Boeing to be able to go back into China?
Yeah, this is obviously a good breakthrough for Boeing. As you said, this happened a couple of weeks ago. A warning shot from China saying we won't take the aircraft that we're due for delivery. In fact, some aircraft that were already over there were sent back. So now it seems that we have a state of thaw. We know that the US and China have sort of put that trade war on halt, or at least have given themselves a bit more time to sort things out. And as part of that, maybe an olive branch, a sign of goodwill. They are now agreeing to take deliveries again. We will get the Boeing deliveries for the month of April later today, so it'll be interesting to see what kind of numbers feature from China in there. But really what it shows is that aircraft and aircraft deliveries are a political tool. You're going to see it again in Trump's trip to the Middle East. He's in Saudi Arabia now, but we're expecting potentially a big deal out of Qatar, a commercial agreement. We saw last week between the UK and the US, where British Airways and the parent group IAG ordered aircraft. So planes are really a big diplomatic tool here. Just a short moment ago, we saw the Riyadh Air CEO shake hands with Trump. So a lot of dignitaries in the room there trying to make these deals, and planes feature quite heavily in that.
Hey, Benny, just while we have you, we had an email come out from United CEO to many journalists' inboxes this morning, basically saying that Newark Airport is safe, that it is absolutely safe, was the word he used, to fly in and out of it. What is the latest there in trying to beef up American air traffic control and alleviate the concerns of many Americans, saying, again, there, that the truth is that all the flights in and out of EWR, which is Newark, are absolutely safe?
Yeah, that's obviously an attempt to sort of keep people not worried, not have them worry too much about what might be going on there. Yes, we have had issues at that airport. We had those outages with radar, which are obviously concerning, not once, but twice. And it has happened in the past. So people are obviously worried about this. The FAA, the Trump administration, they're looking at this. And again, it's become a bit of a political football. The current administration saying that the previous administration under Biden, under Transport Secretary Buttigieg, the former Transport Secretary, they were dragging their feet. So they're investigating this. Clearly, the technology is outdated. Clearly, these are understaffed stations. So something has to happen. It won't happen overnight. So for the time being, probably the best that airlines can do is reassure people that this is a safe way of traveling, that the airport in particular is safe. And that's why we're getting these messages.
Benny, thank you so much. That is Bloomberg's Benedict Campbell with the latest on airlines. And again, you are looking at live pictures in Riyadh at the Royal Court, where President Trump and Mohammed bin Salman, the Crown Prince, are greeting the U.S. delegation. Each of them have come up for a few minutes at a time to shake hands. A lot of business leaders there in that American delegation. All right, now a break from those live pictures. I also want to set you up with what's ahead today, get you set up for your trading day. We're going to get the latest U.S. CPI report that comes out at 8:30 a.m. Eastern. And again, that U.S.-Saudi investment forum that will be happening throughout the day in Riyadh, and an EU finance ministers meeting that will be happening today in Brussels. Now for these markets, we take a break from the enthusiasm of yesterday. Your S&P 500 future session down about 0.33%, as does the Bloomberg Dollar Index after its best day since November. U.S. 10-year yields down by about 2 basis points. They were higher by 9 yesterday. It was the front end of the curve that really moved yesterday at one point, up 12 basis points as we move further to price out rate cuts. So the next event on your calendar, 2.5 hours time, you'll get the U.S. CPI report. Surveillance will break that down for you. For now, that's it for your Bloomberg Brief. This is Bloomberg.